All right, it is Sunday, November 16th, and this is an update to my $1,000 Robinhood Roth IRA Freeroll challenge. What I did is I deposited $1,000 into a Roth IRA account and received a $30 match bonus. And my plan is to grow the account without risking from the $1,000 deposit. So it's a free roll. I've made 3 trades so far, and here's a summary of that. My first trade was in GDX on October 9th, and I risked big on the first trade. I risked $25.48 of the $30 match, and I did show a profit of $23.74, bringing my account up to $1,053 after the first trade. The second trade in XLU was essentially break even. I lost 32 cents while risking $7.48. So the account was not changed much. And the third account was in IAU, where I was risking $13, and I lost $13.17, bringing my account to $1,040.25, and that's where we are going into this week's trade. And so I decided to get back into the gold mining business with another trade in GDX. This is what the daily chart looks like over the last year for GDX. You can see it. I believe my previous trade ended somewhere back here. I believe it was this big red candle here. I'm not sure. I don't still have the drawings on there. But then it fell below the 21 and stayed below the 21 exponential moving average, this light blue line. By the way, this dark blue line is the 89 exponential. This dotted yellow line is the 5 exponential moving average. And let's kind of zoom in here. This is what it looked like as of Friday, November 7th. And then, it's kind of forming a base down here. If it can come above the 21, then I'm interested in it as being a potential continuation of this long uptrend that it had been in. So I wanted to enter when the price went above the 21 here. I also referenced this BX Trender, which uses the 21 and the 89, measuring the interplay between those two moving averages. And so what happened on Monday, if we play forward one, is it gapped up above the 21 all of a sudden, and decided that I wanted to go ahead and enter. Notice this BX flipped from dark red to light red, indicating a possible momentum shift from fearful into less fearful. And let me put my drawings back on here. So I entered here on this green line at $75.70. I'll just go ahead and zoom in over here. And I set my stop just a little bit below the low of the day. So my stop was set at $74.48. And if we get out the calculator here, $75 minus $74.48. That's $1.22 risk per share. And I decided to buy 9 shares for a total risk of $10.98. Remember, I'm starting the account around $1,040, so I wanted to risk about the amount that would put me back to the $1,030 level. So I still had some more money to risk with in future trades if this one ended up losing. So my risk was $10.98. My investment was $75.70 times 9 shares. So $681.30 was the investment. And I've also drawn here the first purple line. This is the 1 times risk level. So remember, the risk was $1.22. So if we take our starting price plus $1.22, that's our 1R, 1 times risk, $76.92, and then I have another purple line drawn here at $78.14, which is the 2 times risk. And my plan is, as soon as price gets to the 2R level, then I want to sell 1/3 of my shares, which would be 3 shares. And so the next day, price goes up a little, goes up to about the 1R level. I don't take any action, but I do make sure that for the next day I have a sell limit order set at the 2R level. And the next day, price goes up, and so my sell limit order gets triggered right here on this this pink line here. I'm trying to make sure it's highlighted. That's where my sell limit order executed at $78.14. I sold 3 shares. And then I also, once I had done that, I also moved my stop to break even at $75.70. And another decision I made is that if price went up to 4R, which is this dotted purple line here, at $80.58, then I would have a sell limit order placed there to sell 1 share, and then make further decisions about selling into strength once I see the next day's candle. And what ended up happening is overnight, the sell limit order did trigger and sold 1 share at $80.58. Then the next day, the price dropped it back down to 1R, and I didn't take any action. And the next day, which was Friday, the 14th, the price actually gapped way down. It gapped remember my stop was set here at this green line at $75.70. So on the Friday opening, the price opened not only below my stop price at break even, but below my original stop price, and it triggered a sell of my remaining 5 shares at $73.35. So, and then throughout the day, the price, of course, I sold at the low of the day pretty much, and price ended up rising above where my stop price was, but I was out of the trade at the beginning of the day. And so let's look at the results. So remember, we bought 9 shares at $75.70 for an investment of $681.30. Then on the 12th, we sold 3 shares at 2R, which was 78.14, and that gave us a profit of $7.32. On the 13th, that's in the overnight between the 12th and 13th, I sold 1 share at 80.58, and that was for a profit of $4.88, bringing my account up to 1,052. And then on the morning of the 14th, I sold the remaining 5 shares for a loss of $11.75. And so the total result for the trade is that I showed a profit of 45 cents. And that kind of demonstrates, the power of making sure to sell once you reach the 2R. If I hadn't made these sells, this would have been, I would have lost more than what my planned loss was. So by selling into strength up here, it allowed me to have a break-even trade after this bad result of a big gap down. So it protected me, but it kept me alive in the trade for free in case it wanted to keep going up. So this, it's pretty much a break-even trade, so I don't really want to go through the all of these summary numbers, but here they are. And I also wanted to show my equity curve. So this blue line is my account value each time I make a transaction. Like, for example, in this trade, we showed a profit of $7.32 on the 12th, and a profit of $4.88 on the 13th, and a loss of $11 on the 14th. So that's what this this blue line plots my account value according to those transactions. And the red line is the what would have happened if I had taken the $1,000 and put it into the S&P 500 at the beginning. And so that as this chart progresses over time, what we want to see is that the blue line stays above the red line. That's how I'll measure my success if I'm beating a buy and hold S&P 500 strategy. And it's, still in the early days. We are 27 days into this experiment so far. And the account value is at $1,040. So we're, we're up 4% thanks to the 3% match bonus plus a little bit of positive result. And so I'll continue updating. I'll have another update video next week.